Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Tuesday morning in Manila. We are about an hour into the shortened trading day. Let's go straight to our banner story. Investments approved by the Board of Investments more than doubled in the first half of 2020. That's driven by projects in infrastructure, real estate, and transportation. You can see on your screens here approved pledges surged 112% to 645 billion pesos. That's in the first semester from 304 billion in the same period of last year. Domestic investments jumped 166% to nearly 627 billion, while foreign investments fell 73% to 18 billion pesos. BOI Chairman and Trade Secretary Ramon Lopez says the robust bounce back shows the country's resilience as it begins to transition to easing out restrictions after a prolonged lockdown of the economy. He says that while he expects a lower GDP in the second quarter following the contraction of 0.2% in the first quarter, there are now signs that the economy is recovering, with industry conditions becoming stable. The 96 BOI-approved projects in the first half are expected to generate at least 27,000 jobs. This is led by San Miguel's 530 billion peso airport project in Bulacan. Other recently approved investments include Sea Oil Philippines Petroleum Project in La Union and Gigasol's 63 megawatt solar project that is in Central Luzon. Vehicle sales also saw an uptick in the month of June, showing signs of recovery as the government relaxes lockdown measures. Data from the vehicle manufacturing groups show that sales have tripled to over 15,000 units in the month of June. However, this was still lower by more than half compared to the car sales in the same period of last year. Toyota retained market leadership. That's despite sales falling by nearly half in June. Other brands also saw a decline, the worst plunge coming from Nissan Philippines with a 70% drop in sales. The Chamber of Automotive Manufacturers of the Philippines, or CAMPI, said it is cautiously optimistic following the June data, saying recovery for the auto industry may take time, but at least consumer demand has started to pick up. Several companies such as Honda and Mitsubishi have started ramping up promos and discounts to attract more customers. Kia Philippines, meanwhile, sees the auto industry sales reaching 275,000 units this year, noting demand from employers seeking transport options for their employees amid the quarantine. Kicking off markets this Tuesday morning on the global front, you can see in my terminal here a bit of a mixed picture. Let's kick off with the US. You can actually see the Dow Jones generally flat, but the S&P 500 and the NASDAQ pulling back a touch that Monday morning. Actually, yesterday, the S&P 500 briefly touched the highest it has seen since that slump in March. The NASDAQ had also reached record highs, but then had closed lower, as I mentioned. Now, the sentiment was later on hit during the trading day yesterday on signs that the virus is still throttling the reopening plans in states in the U.S. like California. There was also big geopolitical news. The Trump administration had rejected China's expansive claims in the South China Sea. Before then, they had actually not taken sides in the dispute in the West Philippine Sea. So a lot of interesting things going on in terms of U.S.-Sino politics here. Now let's take a quick peek at Asia Pacific. It is also opening on the back foot. There are a lot of things to be watching out for today. I'll check back in on China. But you can see that all the major indices, particularly in Japan, Hong Kong, and China, are opening in the red. Singapore as well. That's the FTSE Straits Times down 0.5% as of 10:20. Now, China has a lot of things that are due out today. Balance of trade, for instance, and GDP due on Thursday for the second quarter. Another thing to be watching out for, I did mention Singapore's FTSE Straits Times because their economy has plunged into a recession as of the second quarter. One thing that might be a shining star here are the casino stocks. Macau's casino stocks in particular had jumped after it said it would stop making travelers from the city quarantine for 14 days upon arrival. But you can see here the Hang Seng down by 1 3/10%. They're going back into what Bloomberg calls a deep freeze. The city will now be limiting gatherings 4 people starting Wednesday after another record 41 local cases and its 8 deaths. So again, they will also be observing a 1-week closure of bars, gyms, and Disneyland after already having reopened. Let's move on to the domestic front. Our local index also opening in the back foot. We're extending the losses that we had seen yesterday. We are down by 0.4%, trading at 6150.89. Now, analysts had already called this ahead of the week, starting yesterday, and we already shed, 0.4% yesterday. Darren Pangan of Timson Securities is saying that the market had skipped out on most of the regions upward move yesterday. So investors still staying on the sidelines, still anticipating those second quarter earnings report, which are of course coming out in the next few weeks. Another thing to be pointing out here, Chris Mangon of AAA Equities saying that there is a spike in COVID-19 fatalities has stumped out any optimism that investors might have had. We also saw very weak turnover of trades, just over 4.6 billion pesos exchanging hands. And again, another day, the sixth straight day of net foreign selling, albeit a bit milder than what we've seen before. Now, let's take a quick peek at our sectors here and which ones are actually, if at all, sitting out that sell-off. You can actually see the property counter jumping by 1.3%. That's a very interesting, thing to be seeing, given the fact that all the other counters are in the red. Those losses are led by the financials, which are down by more than 1% in just the first early hour of trade. Let's take a quick peek at which one of those property players are really pulling the weight here. You can see Ayala Land up by 1.8%, SM Prime as well. So these are, of course, the two big guns. And when those get bought in, they tend to buoy the rest of the local bourse. Of course, it's not necessarily bringing the index back up to speed. Now, let's take a quick peek at some food stocks here. We haven't really checked in on that as of late. So I've got 3 stocks here, Max's, JFC, and Pizza. On the news that the Trade Department is actually preparing an order to increase the capacity limit for restaurant dine-in operations to 50% for those areas under GCQ. So recall that it was up to 30%. They've now actually increased it to 50% starting July 21. And those under a modified GCQ can actually have dine-in customers up to 75% of capacity. The same will be happening for salons and barbershops starting July 16. So there's a lot of optimism on that front. However, you've got Nomura Global still warning that the mobility is actually dropping. And in the recent survey of corporates in ASEAN, businesses in the Philippines are actually seeing the lowest pickup in operating capacity. So despite the fact that the government is keen on increasing those capacities, Nomura warning that people are still have this fear of going out. Now, more on the ABS-CBN issue, which we had already highlighted yesterday. There are risks, according to several economists, that are being seen because of this ABS-CBN franchise extension denial. This from Ateneo School of Government's Dean Ron Mendoza. He says that the impact of the lawmakers' vote to ABS-CBN expands beyond media freedom. Now, what is he saying? He's saying that investors with sophisticated technology and intellectual property rights, so those interested in investing in the country in technology, manufacturing, and media, are sensitive to a weak rule of law regime. So it's not just about the freedom of press here, but it's also about what he says should be called as regulatory and political risks. Fitch Solutions Country Risk and Industry Research had already said the same thing earlier on when the NTC had actually ordered a cease and desist order against ABS-CBN and its affiliate Sky Cable. That was even earlier on June 30. And you've got a lot of issues here in terms of trade. So European Chamber of Commerce also saying that this is actually one of the issues. Some people might be interested to invest, but they cannot enter. He described press freedom as a key issue for foreign investors. Now, the interesting thing that did happen yesterday, and you could actually see that it's paring back, is how GMA had overtaken in terms of market value the shuttered ABS-CBN. So GMA is, of course, its closest rival. You can see here the GMA 7 shares pulling down a touch. That's down 9% at this open. This, of course, having jumped as much as 41% in Manila trading, the highest since 2014. A lot of bets on GMA becoming the nation's dominant television and radio network, and this amid the shares of Lopez Holdings, who of course owns ABS-CBN, sinking by as much as 8%. And you can actually see that still continuing its losses here, down by 3% this morning. ABS-CBN is still, as of now, suspended. And finally, speaking of the Lopez Group, there's still also more whammies in terms of one of their units, that is First Gen. They just got fined for distorted supply pricing. So the Energy Regulatory Commission has imposed a 1 million peso fine on one of their power generated units, supposedly for offering supply at an anti-competitive price. So one to be watching out for, and still continuing to watch those Lopez related stocks. More on markets later on in the broadcast with the president of the Philippine Stock Exchange, Ramon Monzon. Meanwhile, let's check in on other headlines we are watching this Tuesday morning. The Bangko Sentral is looking to pause monetary actions for a while to give the financial sector room to digest previous actions. This includes a series of rate cuts done over the past year. The Philippine Star quotes Bangko Sentral Governor Ben Diokna saying the central bank has a number of bullets left that can be used should the need arise. Now, apart from the 175 basis point cut in interest rates, the BSP has also lowered its reserve requirements for banks to 12% as it targets single digit by 2023. The central bank also plans to lower the minimum size of each investment management account as part of its push towards financial inclusion. From the current threshold of 1 million, the BSP is looking to reduce the minimum amount to not lower than 100,000 pesos. HSBC, meanwhile, sees the BSP further easing the country's monetary policy this year. That's in anticipation of a prolonged U-shaped recovery due to the impact of the pandemic. The next BSP policy meeting is set on August 20th. The National Renewable Energy Board, or NREB, says they're now studying the possible adjustment of the minimum electricity level contracted by renewable energy developers. The board says this move will allow the Philippines to increase its chances of hitting the 35% target of power from renewables over the next decade. In a webinar, AC Energy President and CEO Eric Francia pointed out that the Philippines might not meet its clean energy share target with the current Renewable Portfolio Standard, or RPS. The RPS has a mandated threshold annual incremental percentage of at least 1% renewable energy in electricity sold by distribution utilities and retail electricity suppliers. Francia noted that the annual increment should be increased to 2.5% by 2025 for renewable energy to grow to 35% by 2030. With this, NREB Chairperson Mona Lisa de Malanta told Business World that the team tasked to monitor the implementation of the RPS is now discussing the proposed move. The AMLC said the national ID and the registration of SIM cards will add teeth to enforcement efforts against terrorism financing. AMLC Executive Director Mel Georgie Racela told Business World that both measures may aid the law enforcement agencies in, quote, tracking down criminals and curbing illicit activities. Note that the proposal for SIM card registration has been pending in both chambers of Congress since 2019, whereas the rollout of the national ID system was hampered by the lockdown. 5 million households are targeted by the NEDA to be registered starting November, a month behind the original October schedule. Currently, AMLC is investigating cryptocurrency transactions by groups linked to IS or the Islamic State. For its part, the BSP said it will conduct a third sectoral risk assessment on anti-money laundering and counter-terrorism financing in the banking industry. More on market news when Business World Live returns. Stay with us here on One News. guys are watching Business World Live. I'm Danie Laurel. Equities have seen some of their darkest days in trading history, but all hope in 2020 is not lost, as some courageous issuances take the crisis as an opportunity. Here to give us an update on the local bourse, we have the president of the Philippine Stock Exchange, Ramon Monzon. Good morning, sir.
Good morning, Danny. How are you?
I'm very good. Thank you, sir. Sir, let's just kick off with general trading sentiment and a look back on what you've seen in the first half versus what is going on right now. Do you still see the bourse moving with the COVID-19 cases, or has the market already priced in these risks, and are we already focused on living with the new normal, so to speak, taking in more risk appetite?
Well, I think the market's about ready to, I guess, discount the COVID-19 until the recent days, where not only in the Philippines but globally we see an alarming increase in the number of cases. So it seems like while the COVID-19 crisis was about to be controlled, apparently it's gotten out of hand. I mean, so there's a lot of uncertainty now, I guess, affecting the markets, and our market's not spared, with this uncertainty.
Sir, are investors actually looking at fundamentals right now? I mean, we had the first quarter earnings come in. A lot of analysts were actually disappointed since this didn't even take into account all of the lockdowns. But then, you actually had the government and even the boards requiring firms to give a guidance for how the pandemic would affect them. Has this guidance helped in easing the volatility in the markets or in managing expectations?
Well, I think it's July now, so the second quarter's ended. We'll be seeing a lot of earnings release probably in the next 2 or 3 weeks, and well, people have tended to discount the earnings for the rest of the year, but they don't know really how big, how steep is the decline. So everybody's awaiting that. I mean, there should be some reaction to that.
Are you feeling that investors, I'm just going to take out the chart here, sir, in the terminal of the foreign funds. We had already seen them trickle back in, at least in the middle of before June and before these cases started resurging. But what's happened recently is that it's really the domestic investors keeping our market resilient. What is going on here? Are we still expensive in terms of PE, in terms of the earnings that have come out compared to others, or are foreign funds just waiting for more? I don't know, for the cases to come down? What is really going to be the catalyst for them to come back in?
Well, the net foreign selling, in fact, has been a bit alarming. For the first half of the year, we had about 68.3 billion pesos of net foreign selling, almost half of which came in the 2 months of April and May. It's tempered down a bit, but even for July, we're continuing to see some foreign selling, not as much as we saw in March and April. So I guess there's still uncertainty in the emerging markets. And I guess we'll be taking our signal from the developed markets, because even in the US, I mean, they were on their way up, they're back, they're down again. So this uncertainty is affecting, I guess, everybody. On a PE ratio, as of yesterday, the PSE is was at 12.6. So it's a very attractive PE. But again, that depends on what the earnings outlook will be for the rest of the year.
Okay, sir, let's talk about some practical issues here in terms of trading. You've maintained these shortened trading hours for several months now, and this allows people to trade from home. I think you've beefed up a lot of digital platforms, especially for retail investors. We've actually seen a surge in the amounts of openings of accounts from specific, trading firms. Tell us, has this actually balanced out or counterbalanced the fact that you have shorter trading hours, or are you still feeling a pinch in terms of the volumes of trade?
Okay, it seems, well, at least from what we can see, and historically, our shortened trading hours has not affected the volume.
Okay.
In other words, actually, we're just 1 hour shorter than the previous
Mm.
because now we don't have a lunch break. We used to have a lunch break before. So we're 1 hour shorter. And, I get mixed reactions, okay? Some investors or brokers tell me they prefer the shortened hours because there's a smooth flow in the trading. There are no downtime and all that. There's no lull. On the other hand, I mean, some brokers also say, it might not look good optics wise if the Philippines is operating on a half day basis. It might,
Mm.
project an image that we're not, ready or stable. So those are the things that we're balancing right now.
So, what's it going to take for you to go back into the normal trading hours, especially since now GCQ na, so actually people can start going back to work. You are an essential industry, and can you compare nga our trading hours to the others in Asia? Have they? Everybody else is operating as normal.
Well, right now, I mean, I don't know if it's still a very big factor. There's still a curfew. Okay,
Mm.
I think at 10 o'clock for most of the cities and municipalities. So until we're able to, address that curfew issue, I mean, not everybody, especially now where public transportation is very difficult. I think we will maintain the shortened trading hours. Should the curfew be eliminated, then that's the time we will be discussing and making a decision if we go back to the previous regular trading hours.
Okay, so nothing too urgent for you, especially since it doesn't affect naman the trading volume. So let's speak
Volume,
about
yeah.
the specific issuances. So very, is it surprising for you that they are still tapping equity markets despite the volatility? But we did have a couple of issuances, but they are still very small compared to what you were expecting earlier
Correct.
on in the year. This is of course Mary Mart and AppV, but they were faced with so much appetite. Can you tell us whether this appetite was expected given these are small issuances, or was this really very surprising?
Well, I was not surprised about the reception the last three IPOs got because they were small issues. They were
Mm.
priced reasonably at the 1 peso level. So psychologically, it made it very accessible to a lot of small investors. In fact, in the last IPO, we had the biggest number of local small investors that subscribed to this IPO under our PSEEC platform.
Mm.
Uh, so I was not surprised because it was very small. I mean, Mart was raised about 1.5 billion. The listing by way of introduction of Altus was also quite small. The prices are doing very well. But what really, I guess, delights me is in spite of all this pandemic, we've received application for the biggest IPO ever for the Philippine stock
Mm-hmm.
market, okay? Converge IPO. That's a
Correct.
35.9 billion IPO. So, I'm delighted that, this confidence shown by the market or by the companies as far as fundraising is concerned seems to be there. What's noteworthy with the Converge IPO is that there is a foreign private equity fund, okay,
Mm.
who's an investor who will be listing their shares, part of their shares as secondary shares. Meaning to say, even this foreign equity fund seems to have the confidence that, the Philippine market is, I guess, ripe for capital raising even at this time of the pandemic.
Sir, will the pricing be affected if they raise cash right now, especially since prices are depressed and there's a lot of risk aversion here? Why do they need the cash right now, especially since you mentioned they're already backed by Warburg Pincus, and
Yeah.
this was not one of the IPOs that had expressed this was not one of the companies that had expressed IPO interest at least last year.
Well, I don't want to speculate what their motives are for listing at this time, but
Mm-hmm.
well, that you mentioned about Warburg Pincus, I mean, it's a private equity fund. The DNA of a private equity fund is to exit if they can exit, right?
Mm.
I mean,
Okay.
there's supposed to be the developmental capital, and when things get, launched or start operating, they're supposed to exit and look for other projects. So the
Mm-hmm.
fact that uh, they've decided to exit, not totally, just part of their holdings, I guess to free up some funds for other projects. I mean, shows that they have confidence in the Philippine market.
Sir, let's talk about other issuance coming in. You've got the A-REIT finally there. So that's the Ayala Land REIT.
Correct.
This is something that had, been on the table for a while. It got delayed. Is there going to be any change in terms of, the REIT listing rules, especially given the fact that it's talking about commercial and office properties, which right now are in a very tight, difficult situation when you're talking about recurring revenues?
Well, the ARIT management made a presentation to PSE on their financials, on their projects, and it's, at least from what I recall, I mean, the three properties that they are going to include in the REIT, they're all, I guess, 90 to 99% occupied. Okay, so and they have long-term contracts with these companies. So I don't think this particular REIT will be affected by that.
Okay, and sir, Double Dragon is also targeting 17 billion proceeds. Another one raising it. To what extent, again, is this REIT going to be affecting Double Dragon's stock performance per se? Do you feel that there is going to be a flight from the property stock in particular towards these REITs, especially since you mentioned these are already completed projects?
Well, I guess for Double Dragon, I mean, the shareholders or stockholders of Double Dragon will be looking at the funds that Double Dragon can raise from the REIT. Okay, that will hopefully help them expand their projects or businesses elsewhere. So it gives them investable funds. Will the Double Dragon REIT, will they be cannibalizing the Double Dragon company itself? Probably not, because
Okay.
two risk appetites really, one for REITs and one for, I guess, a real estate development company.
Sir, do we have enough liquidity to absorb these three issuances? So you've got a 36 billion IPO of Converge plus two significant REITs, up to 17 billion. Do we have that much of money and interest, especially if foreign funds are still wary?
Well, if anything, what surprises us on the PSE is that the volume of trading has been up for, the last 2 months. Okay, we were
Okay.
averaging about 5 billion a day in April and May. Starting in June up to present, we're averaging about 8 billion. So there seems the liquidity is there. I mean, there's no question about it. There's liquidity in the market.
Sir, are you expecting more capital raising? So you had a target of, if I'm not mistaken, 6 earlier on before all of this COVID happened. Now you mentioned 2 to 3, but you did mention you're reviewing the listings rules to make it more accessible. What in particular do you mean by reviewing the listing rules?
Okay, for listing rules, what we're doing basically is we're reviewing our listing rules for the SMEs. Okay,
Okay.
because I think SMEs would have a difficult time going to the debt market at this time. I
Correct.
think
Okay.
will be very circumspect in their lending practices, and yet we know a lot of small businesses are going to need funds. So we want to make it easier for small companies to be able to raise funds in the equity market. So we're trying to see how to relax the rules. Maybe right now we have a track record of 3 years. We have certain minimum capitalization. So that's what we're doing now, see how we can, be more flexible in those requirements.
Sir, what about the minimum public float requirement? Is that still ongoing? Are you still doing a review on that?
Well, right now, I mean, the minimum public float of 20% for IPOs, which SEC imposed in 2018, is still
Correct.
in force.
Okay.
They were supposed to have a project to increase the float of all listed companies to 25% over a given period of time, let's say 3 years to 5 years. Well, obviously, they think it's not the proper time to be, implementing this with this pandemic happening.
Okay, so at least some assurance there that there's not this pressure for that to be happening. Sir,
Right.
before we let you go, just very quick update on your projects that you had planned. You had, the bond exchange was on your radar, short selling, consumer index. What's the update there for the rest of 2020?
Okay. Actually, more than the bond exchange, what we were really looking to acquire was the depository, because
Okay.
for risk, for risk management purposes, I mean, the depository should always be under the control of the equities market.
Of course.
And if you will see, if you benchmark the other exchanges own and operate their respective depositories. So that's what we are really very interested in. And well, we have not given up that idea to acquire it. We had a little, you might say, obstacle along the way. It took us a while to be able to comply with the minimum ownership requirements for brokers, and I'm glad to say that we've complied with this, starting
Okay.
this year. So that particular obstacle should be out of the way. Hopefully, the regulators will be looking at our, proposal more, favorably.
Okay, thank you, sir, for those updates. That was,
Okay,
of
Debbie.
course, Ramon Monzon. Thank you, sir.
Okay, have a good day. Bye.
And that was a first look into the business day. Today is July 14, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.